Good afternoon, everybody, and welcome to this Easy webinar. One of the things we love doing at Easy Equities is giving our users access to CEOs and people that work at the listed companies that you invest in. And we've been having a few of them share some thoughts the last couple of months from Renogen and a bunch of other small caps. And part of the conversations around the fact that the majority of the companies actually listed on the JSE are small caps. And we need to make more of an effort to give users and investors exposure to those companies. And today, not only am I delighted that we've got another small cap that we're talking about, but it's our very own Purple Group, which we're obviously very passionate about. And we're joined by our CEO, Charles Savage, as well as my teammate from the brand team, Drip King Lesedi. And we are really looking forward, Lesedi and myself, to giving Charles a hard time. One of the great joys working with and for Charles is that we're also investors. So he works for us and he's answerable to us and everybody else on this call. And I know he is looking forward to sharing not only some information around the results, but also the plans and the future ideas that we've got for Easy Equities. Our purpose, as you all know, is democratizing share investment, giving everybody an opportunity to access the stock market and to be on a journey of financial freedom. So before we get to Charles, I'm going to kick off with Lesedi. Lesedi, what did you think about the results? As a brand member and as an investor, what were your thoughts?
How's it, everyone? Lovely to see you guys again. Hey, I just wished I invested more and I wasn't in a lock period. I just wish I threw like way more money into Purple Group. And I'm stoked to see what's happening with the group and how my portfolio is looking. So yeah, my only regret is that I should have put more money.
Good. Well, as we know, the best piece of advice for investing is just to start and to dip your toe in it. So let's not regret time. Charles, welcome to you. And you can kick straight off, please, by telling us what's your favorite part of the results.
Look, I've got no sympathy for Lesedi because if he spent less on jewelry and clothing, he might have been able to spend more on shares. So pity. As you can see, I'm wearing branded clothing, which means I didn't spend any of my money on any of that stuff. Look, I love the results for many reasons. I think, fundamentally at the center of our growth story is Easy Equities. And as probably all of you know, that's been my passion and purpose inside the group and focus predominantly for the last 6 years. So for that to be profitable for the first time is an extraordinary milestone 6 years later, which is, it wasn't scripted in the business plan, never is. Every business plan I've seen is 3 years later and you're profitable. So, my favorite outcome was certainly the profitability of Easy Equities, but that does pull the attention away from some of the other stars, and you have to pay a lot of attention and thank you and say a lot of thank yous to GD247 and the contribution it continues to make to the group. If it wasn't around 6 years ago, there would have been no Easy Equities. It has funded the group predominantly to this point. And despite the fact that we've underinvested in that opportunity at the expense of investing in Easy Equities, it continues to put out stellar results and be a great cash contributor to the group. And I don't expect that to change. And I think as we get more profitable and have more capital, we'll be able to invest more fairly in some of the other group companies. And then that leads me to Emperor Asset Management, which, whilst on the income statement, it's a small contribution. It's a business that I am deeply passionate about. It does something really different in the asset management industry from what other asset managers do, specifically around the fact that 90% of its investment decisions are driven by quantitative assessments, so the machine algorithms. And in the year under review, it's the #1 international fund in South Africa by some margin. Today I saw it's actually up 107% year to date. Just an incredible effort from the team. But I guess bigger than that result is the fact that it's 10th globally against the biggest peer group in asset management. And this lowly little small little asset manager, penguin on the tip of Africa, is disrupting asset management globally. And for me, it's nice to see it profitable again. It has been profitable before, but we spent a lot of time redefining what it does and how it does it and who its market audience is, and I think it's getting that right now. And I expect over the next 10 years that this is going to be a big fuel for growth inside the group. It's not a short-build business. It's not something that's going to stand up in the income statement 12 months from now. But there's great balance in our income statement finally. I mean, if you think about what all those businesses do, you've got the day trading assets in GT247, you've got the long-term investment assets inside EasyEquities, and then you've got the managed assets inside Emperor, which is fundamentally exactly what we provide our customers through EasyEquities, DIY, managed, invested, and advised. And so, yeah, I'm proud of the entire result across the board. And then, the key underpin for that is in COVID. This wasn't in normal market circumstances. We're here sitting on a Zoom call, which seems normal now, but we did this in COVID. We scaled the business at an incredible rate, and we could never have done that without an extraordinary effort from the team. And so I guess, the proudest thing in that income statement isn't the lines of income. It's the team contribution that income statement stands on top of, and all of the efforts of all of the staff in coping with COVID, scaling the business, adopting an agile framework at an accelerated pace, and delivering all of that whilst containing costs. Costs were only up 16% across the group, yet we were scaling businesses in some instances at 400%. So, yeah, a great set of results, the best set of results I've had the privilege of being CEO on. But it's not the last set of results we'll post like this. I think there's some real momentum in it now.
Right, thanks, Charles. So as part of, it was a great introduction. So as part of this hour-long chat, I'm going to do what I'm calling the hygiene questions and take some questions also from our users. And then we're going to hand over to Lesedi to do all the fun, interesting, and difficult stuff with you. So to kick off, I want to go back a little bit to what you've said about Emperor. So in Purple Group, we have an asset manager, which fundamentally looks after people's money so that all the decisions are made for you by smart people and smart algorithms, as you said. Can normal people, average investors, so the rest of us on this call, access that? You said on Easy. If so, how and why? And do you think enough people are accessing Emperor on the Easy platform?
Yeah, so the short answer is yes, they can access it on the platform. It's under bundles, and just look for the Emperor range of bundles. And you can, if you're not sure which bundle to choose, then if you actually click through from the bundle to the Emperor website, there's a very simple way to assess which bundles are appropriate for you, which I don't think enough people are using. Now, in terms of are enough people using the bundles, not in my view. And I'm not giving advice, although I am an advisor, but obviously it's different for different circumstances. But if I take my view on asset management and what I personally do, I outsource the long-term boring aspects of my portfolio. So for example, Emperor manages 100% of my retirement annuity. And the reason for that is I don't have a 30-year horizon or attention span. So for me, it's just too boring an activity for me to manage. And importantly, short-term noise will influence my long-term decision making, and that's bad for investing. And so I outsource my long-term assets to Emperor, and it's just such a pleasure. Money goes in every month, my RA gets filled up every month, and it gets looked after, and I check on it 3 or 4 times a month, and I get to sit with the asset manager from time to time and understand what's going on. So for me, the long-term goals in investing are ones that, or boring goals are ones that you should probably look to outsource, or at least give an asset manager a part of. Importantly is to evaluate your own performance against these asset managers. So if it's not to say that you can't be better than them, this is Emperor is a machine algorithm that is doing generating really good returns, but sadly 9 out of 10 asset managers don't beat the index. So the default kind of position around asset management is at the very least outsource some of your assets to the ETF, Satrix, the passive providers and others. But for me, it's about getting balance in your portfolio. And if I look at mine, I have about 50% of my assets in passive assets and in index trackers, and then I have 50% of my assets in high conviction stocks that I've fallen in love with. And some of those stocks I didn't select. I don't know everything about everything. In fact, I know a lot about very little. And so I focus on the things that I know a lot about, and I buy shares in those directly. And then I outsource everything else to the asset manager. So, in my portfolio, I love the digital disruptors. I've been following companies like Uber and Amazon, Alibaba, Tesla, who else fits in that category, Facebook, Twitter. I follow those companies, and I'm not interested in an asset manager's views, because I've read the annual reports and I've attended the AGMs, and I think I've got an as informed view as anyone else. But what do I know about biotech and cannabis and a whole lot of themes that I don't know nothing about? And so I outsource, percentage of my portfolio to Emperor in that regard.
Great, thanks. We're not going to spend too much time on each part of the business because we don't have enough time, but we also don't just want to talk one part of the business. So that's the asset management part. You touched briefly on GT247, which is a trading platform. Is that something that is in the future of the group? And what do you think is the value of having a trading platform?
Yeah, I mean, it's an interesting question, and the jury's still out, Carl. It's a legacy of our past. It's what brought us to the group, brought me to the group. It's what I've done for 20 years now. But we have to either fall in love with that asset again, and when I mean fall in love with it again, we have to invest in it again. We have to take a concerted effort to grow it, nurture it, and give it its rightful place, because it's a fantastic business. And if we're not going to do that, then somebody else should, which means we should sell it to somebody who does want to fall in love with it. And I'm not sure yet. I think that trading is always going to be a meaningful part of the investment landscape. And historically, 5% of all investors go on to trade. And if we're creating the larger, safer space for investors, then surely we should want to capture the 5% of investors that graduate to be traders. So I think it's a decision we've got to make in the next 12 months. We parked the decision the last 12 months and said, look, let's just as is. Let's keep our focus on easy. Let's get that profitable. And once we're profitable and we're beyond that milestone, then we can look to GT. But we're not going to have that excuse this year. And early next year, we're going to have to sit down and really discuss this. My gut feel is that asset is best in our hands. It's a team that we love, and a platform that we understand, and a capability that we also understand, and that we should fall in love with it again. If we're going to do that, then I think we must bring it closer to our user experience, and ensure that it has the same investment profile as we have had in EasyEquities.
Yeah, great answer. And I think touching on the brilliant team that we have there, as we continue to provide more education, more support, to enable people to make better trading decisions, there's lots of runway there. So it's exciting. Next part of the business that I want to chat about is Easy Properties. So that's a business that's been around for a couple of months. Maybe you can just share why that's important as a tool for people to invest in, and maybe also chat a little bit about the competition that we've got on at the moment.
The spoiled stepchild of the Easy Group. And I say that with a lot of love for that brand and business. I mean, for those who don't know the journey there, that was something you, the customers, told us to build. I mean, literally, we did a survey and asked you what was missing from the investment landscape. And we stacked a whole lot of answers for you. And we thought crypto was going to be the answer. Crypto came in 2, and we delivered that as well. But Easy Properties, residential access to property was number 1. So we built that in response to your requests, your user requests. It's a great business. It's great for many reasons. One, it's a disruptive player in the property space, and we like doing those kind of things. 2 is that it fits so well into the EasyEquities ecosystem, and that is to enable and democratize access to assets that were previously the purview of the rich and famous. And these are high value residential properties that not everyone can afford, and certainly not everyone can afford to invest in a diversified way. And we've now fractionalized access to those. The third reason why I really love it is that the economic model of Easy Properties is very strong. property is a niche investment sector. The margins that you can extract are much higher than what you can extract on an equity trading platform or investing platform, and so it gives us the ability to get a higher margin stream out of the investor base. And that thing in 3 months has produced a stellar set of results. I mean, it by the end of December, it would have put away probably 60 million in property. It's got over 10,000 customers, which that took EasyEquities a year to get to 10,000 customers. It's reached that in 3 months. And if you look at the economic model, you can make the assumption that it's 3 times more profitable than EasyEquities, which means we only need 1/3 of the customers for it to rival EasyEquities on the income statement. Now, just to qualify that, we only own 51% of that opportunity, so the other 49% is owned by the Buffett Group. But still, it only has to be 1/3 of the size to produce the same headline earnings that EasyEquities does. And if I look at the fact that it's got to 10,000 users already, and which we haven't tried really hard with it just yet, and we're going to try much harder in the new year. We're still testing and playing with it and finding out what works and doesn't work. But my bet for the next year will be we'll get to 80,000 customers in the next 12 months, and when we do, it'll be at headline earnings perspective, it'll be the same size as EasyEquities is today, and we'll own 51% of those economics. Right now, it's doing a big raise into one of the big Baldwin properties, which is out in Benoni or Boksburg, I think it is. I played soccer there the other day. It's a great development, and they're all fully letted properties. I think they're 20 units that we've rented out. So there's income from day one, which I think is great. It's a really defendable property investment in the sense that it's well priced and it's well located, and so I think it'll stand up to the headwinds that are facing property in South Africa. And I'm bullish on property for the first time in 10 years. And I'm an equity bull, and the only property I owned prior to Easy Properties was the house I live in. But I'm an investor now in Easy Properties, and I think the next 10 years are going to be good for property investors. South African properties have had really moderate to poor to no returns, and I think the cycle has shifted away from commercial into residential. And one of the interesting things about properties and equities is properties tend to follow equity returns by about 6 months. Equity returns, you're starting to see them in South Africa. We've done 10% in the last month. Don't be surprised when you see the same kind of return profile starting to happen on the property developments, and on top of that, you're getting nice yields. So I think the next 3, 5, and 10 years for Easy Properties is going to be an extraordinary story, and one that we're still playing with, and we're going to grow in confidence as our users tell us what they like and dislike. But early next year, I reckon that thing we're going to take that to market and ramp it up very quickly to at least 80 to 100,000 customers within the next 12 to 18 months.
Thanks, and I think it's an exciting time that the current listing that you talk about in Boksburg Green Park is on at a 4.25% discount, and we've raised just under 70% of the targets. There's a month to go, and the competition that you and I mentioned, for every 100 Rand that anybody invests, they get an entry into our draw, and the prize, which we will be announcing on the 31st of December, is a rent-free option in either our Black Brick building in Sandton or the Rockefeller in Cape Foreshore. And if people don't want to live in those buildings, then we'll let it out for them, and the income we generate will be theirs. So it's a big, big prize.
My wife would like to win that, because then sadly, she can send me there.
Sadly, well, we would all like to, but sadly she's not allowed to win. But everybody else, please enter, and the easiest way to do that is just to go to easyproperties.co.za, and 100 Rand and up gets you an entry. Next business, Charles, DCX10, now EC10, crypto. Some people think it's going to replace big banks. Some people think it's a Ponzi scheme. We're not giving advice. We're making an asset class available for people to invest in, and we've chosen to do it and to partner with a leader in the field, Earl Loxton, and his partner, Michael Jordan. Why EC10? What's the benefit, and what's the future for this business?
Yeah, so, I mean, firstly, I think, cryptocurrencies are the future of money, and potentially, because of the future of money, potentially the future of banking and transacting and all of those things. And secondly, it's an asset class that our customers certainly want access to. I think since launching it, it's been in the top 10 instruments every single month in terms of transaction flow. So there was a demand for it, and we delivered. Why did we choose DCX and now EC10? What I love about it is it reminded me of the bubble, the dot-com bubble days, where I was building websites and buying shares for the first time. And I was trying to pick the winners in the e-commerce game. The future of e-commerce was always going to be, for me, the future of commerce was always going to be e-commerce. The mistake I made is I tried to pick the winners. I didn't just follow the market valuations. And so I didn't end up buying Amazon at $7 or even $70. And in fact, most of the ones that I bought don't exist today. In fact, I think all of them don't exist today. But what DCX does, or EC10 does, is that they buy the top 10 cryptocurrencies by market valuation, market capitalization, which means the ones that are rising the fastest and are the largest are included in that top 10 index. So it doesn't matter which ones come in and come out, you're always going to own that top 10, which means the guesswork is taken out. And yes, sure, you might not get in when it's at one, but you're going to get in as that thing goes up. So I love that. And I think an index, an ETF, a crypto index launched as an ETF is going to happen pretty soon as well. I mean, a few people have tried, and I think, maybe we'll get that right next year. But behind that business, so I like the product and I like the sector to invest in. And personally, just full disclosure, I've got about 3% of my portfolio in EC10. So I'm speaking from my pocket too. But behind that business is a great tech stack, which enables us to tokenize any asset. So we could tokenize, let's play it out in a few asset classes. We could tokenize gold and sell fractions of a gold bar. We could do that in any commodity, hard or soft, which I think is going to be an exciting opportunity. We could tokenize access to government bonds. We could tokenize access to properties in the future, as opposed to using a share structure if it's a more efficient way of keeping a register, which I think it will be in the future. And we could be as obscure, or not as obscure, I guess, as niche as tokenizing access to horses, something that I'm passionate about, or classic cars, something that guys at work are passionate about. So for me, I think that as this digital economy continues to expand and evolve, I think that the digitization of assets are going to be central to the growth of that digital economy. And the technical stack that we've got inside DCX is the capability to do that in a very smart, low-cost, intelligent way. So I love everything about the company, the product, the people behind it. Earl Loxton and Michael Jordan are good friends of mine and mentors, and are a great culture fit for the group, which I think is also really, really important. And finally, I love the tech stack that they're building, and I can see that we can use that and leverage it into so many other opportunities in the future. So it's quietly just under the radar. We have the right to acquire 51% of the equity based on some metrics, KPIs that were set for us. There's no doubt that we will hit those KPIs in the next 12 months, and then we'll have the right to take up those shares, and that'll be up to the board to decide whether they will or won't. But I can't find any reasons why we wouldn't take up our 51% share in that company.
Thank you. Last two questions relating to company and structure, and then I'm going to hand over to Lesedi, and after that we'll take some questions. And there's some great ones coming through, so thank you. Talk to us a little bit about Australia and other regional diversification. There's been talk about Africa, perhaps. What are the ambitions going forward?
Yeah, so we launched Australia in October, and it's been a soft kind of launch process. We're spending a little bit of money trying to find out what works in terms of digital marketing and client acquisition. Nothing we're doing right now is working, so we're going to change approach there. But it's early days. There is definitely, we've got a competitive, highly differentiated competitive offering. What we do, no one else does in that market, but we have to build trust and credibility in our offering, and have to find an acquisition cost that marries the business plan. And what that means is we need a really low cost acquisition cost, otherwise the economics don't stack out. So we're struggling with the marketing, and when I say struggling, we've been at it since October, but we will get it right, and we'll persevere. And when we do, the market opportunity is amazing. I mean, Australians are now I think they're the second richest country in the world by per capita. Only Switzerland is ahead of them. So they've got massive amounts of disposable income. About 40% of Australians have stockbroking accounts and invest for themselves. And, there are 20 million of them, but that means that there's 8 million accounts. Let's just contextualize that against South Africa, where we started. There were only 280,000 accounts. So, the market opportunity there is significantly bigger, even if we get a small share of the market. So we're really excited about that venture. The reason we chose Australia is we see a good market opportunity, but as importantly, the region is very exciting. There are lots of places that are more similar to South Africa that we think our platform capability will fit really well. So places like Indonesia, India, China, Malaysia, are all places that we want to take, Vietnam, that we want to take our platform capability, but we needed to get a beachhead in the region. We want that beachhead to be profitable, and then we want to grow that region out of that profitability. And so the important part, the license to Asia, sits in Australia. We need to make sure we get that business profitable so that we can grow the region out of profits and not go out and raise capital to do it like we did here in South Africa.
Great,
and then
thank you.
Africa, sorry,
Yeah,
Africa, Africa is our opportunity as South Africans and as Africans. It has to be. I think we always stretch ourselves to go places that we don't understand that well. But Africa, there's much a greater affinity between us in South Africa and other places in Africa. We've chosen East Africa as our first entry in Africa. We're a long way down the road with a partnership with the second biggest bank in the region, and hopefully we'll conclude that early next year. And if we do, you'll see us entering that market in a very similar way to the way that we have with Capitec and Satrix in South Africa, where we use their distribution to acquire customers. It's the market opportunity there is significant. It's about half the size of South Africa, but that's just Kenya. When you stack up the whole of East Africa, the market opportunity is about twice the size of South Africa. And the reason we chose East Africa, it is the easiest place to do business in Africa in our view. High smartphone penetration and growing fast, really low data costs, and then the most important one, money moves easily. You can't sell shares if you can't move money to buy shares. So, and M-Pesa, the case study there is incredible. Very strong ecosystem for fintech, very good regulatory framework that makes it easy for fintechs to start up. So we want to get started there. And again, a bit like Australia is our license to Asia, Kenya will be our license to Africa. Once we in that market and got it right, got some traction, got some profitability, then very quickly we'll turn our attention to a lot of other African markets, because there's a really significant opportunity in doing what we're doing in South Africa across Africa. And importantly, it's our role and job to do it. And we want to do it. And what's nice about doing it is our competitors aren't going to come there. The big, well-funded, first world competitors, they're not coming to Africa. You just need too much mosquito repellent for them to come here. And that's a good moat. It's a good protection mechanism for us. We can go there with confidence and know that we're competing with a local fintech environment.
Yeah, and we've got a great team heading up that deal. So it's exciting. Just on the Australia, bit of a heads up for the users. Stuntwa is going to be promoting a campaign tomorrow as part of our Christmas vibe. And so any South African that refers, just using our normal refer capacity, just your link at the top navigation, refers an Australian to the platform, you'll get 10 Australian dollars in your Australian wallet, in your South African EasyEquities platform that you can invest in Australian shares. And the person in Australia will be getting $20, and that doesn't cost you anything. So all South Africans are going to be able to give their Australian mates a $20 gift for Christmas. So we're excited about that. Yeah. Last question before Lesedi's 10-minute start is around Capitec, Charles. And in talking about Capitec, can you please elaborate a little bit about the 50-odd thousand clients we saw in the first few weeks? Their questions around were those existing EasyEquities clients linking or new clients? And maybe you can talk about the percentage and anticipation on client numbers going forward.
Yeah, and I saw Will's question. How's it, Will? Will used to work for us. Those who don't know, he's graduated onto bigger, better things at Investec. But it links back to that question. What we've achieved in the last 12 months it's obvious in our income statement today. But what isn't obvious is that in bedding down these rails, these distribution rails, and Satrix is one, and Capitec is another, and there are a few others. We've secured our growth for a long time to come. How long, I don't know. You know, it might come very fast and quick, or it might come slow and, you know, and for a long period of time. But it was key to our differentiation and locking out our market position to tie up the best partners we could. And we started with the biggest ETF issuer in the country, and that's been a 5-year relationship. Happy birthday or happy anniversary to Satrix today. It literally happened 5 years ago today. And then, you know, it was the cherry on top was Capitec, and Capitec is just an extraordinary partner. Firstly, they phoned us, and that, you know, that doesn't happen often. You know, we wrote down right at the start what would be the biggest partnership opportunity that we would want to secure in South Africa, and Capitec was put on the board. And I think everyone chuckled and said, "No, Capitec's never going to partner you." And, you know, we said that because South African big banks don't tend to partner in a meaningful way. They don't mind buying you, but we weren't ready to be bought. But Capitec have partnered us in a very meaningful way. At the center of their forward strategy is that they want to democratize access to wealth. And you can see it in the language and in the initiatives and programs that they're initiating. There's lots of education, there's lots of mentorship happening on that platform. Now, in order for them to democratize access to wealth, they've placed us responsibly at the center of providing access to investing, both locally and internationally. And they've done that in a way that puts us right on the sort of home screen of the new Capitec mobile banking app. Now, currently they're running 2 banking apps. They've got the old one, which has got about 6 million users, and the new one, which I understand has got about 2.5 million users. At some point in the next 6 to 12 months, the old one will be turned off. At that point, suddenly we're on the rails of a banking app that has 8 million eyeballs a month. And, you know, that's going to provide a lot of growth. Already, and we've only been live, I think it's 7 or 8 weeks now, 50,000 customers have linked their Capitec banking app to the EasyEquities widget, which is what they call it inside the banking app. Half of those customers are brand new customers. We never knew or heard of them before. And half of those customers are existing EasyEquities customers that we had on the platform. But they really, I mean, they've done one marketing message to their customer base directly, which was less than 5% of the customers were targeted. There's another one going live in the next week to target the rest of the customers. And their own aspirations, their own targets for how many customers they want to get us in the next 12 months surpass 100% of the customers that we've got in the last 6 years. That's how confident they are in the desire for their customers to have access to our products and services. And, you know, we don't know if they'll get it right, but I wouldn't bet against them. When we look at things that they've done with other partners, look what they've done with Sanlam, with the insurance product that they're selling. I think Sanlam said it, and Gerry said it. You know, they're Sanlam's biggest distribution partner. That's only been around for 2 years. And everywhere else that we've looked at their partnerships, they've achieved all of their growth goals or growth targets in partnering other providers. So they're a great partner. It's almost like we've got an EasyEquities team living, breathing inside Capitec. They love the brand, they love the team. There's a massive culture fit between what they're doing and what we're doing. So I don't have any predictions for what it's going to be in terms of numbers, but I'll say this, I reckon within the next 12, 18 months, they will match our own growth. So they'll be the same size that we are in terms of number of customers in that period of time. So for me, our partners will ensure that the group doubles its number of customers over the next 12 to 18 months. And that discounts the fact that EasyEquities has its own momentum. You know, EasyEquities brand and customers are doing amazing things for growing our own business, and we're not going to stop doing those things either. So yeah, the growth rails are laid down for us, and certainly to my mind ensure continued growth at the rates we've experienced in the last year for the next 2 to 3 years. The things that I'm thinking about is, okay, what's the next growth opportunity? What's beyond 3 years? Where do we get the growth years 4, 5, and 6? And that's where the opportunities like Kenya, Australia, Easy Properties, DCX, and lots of other initiatives that we're thinking about fit into the picture. Because none of them will be, none of them are going to be overnight successes. But I have no sleepless nights about ensuring that we grow at the same rate that we have in the last 12 months over the next 36 months.
Awesome, thank you. Lesedi, your 10 minutes kicks off. Go for it, bud.
Awesome. Just hello to everyone that just joined us recently. Just a disclaimer, myself, Charles, and Cara are all Purple Group holders. And remember, this does not constitute as financial advice. And if you're looking for advice, please hit up your financial advisor. Sasha, I know you're going to get that wrong.
You are
So
so sucking up to Sasha, but that was a
no,
great
man.
message.
Is
Well done.
Sasha standing off camera, just giving you the cue?
Jeez,
No,
slut.
Okay.
no, got to make sure we say the disclaimers.
Well done.
So let's just start off with some Purple Group numbers. And for all our new investors who don't know Purple Group, Easy Equities is a subsidiary of Purple Group, and which is a company listed on the JSE. And if you're looking for the share, it's on our platform. And we're currently, I don't know what our share price is. Before I checked, it was R1.02. So Charles, speaking of the share price, where do you forecast our share price going in the next 12 to 18 months?
Lesedi, it's one thing I don't spend a hell of a lot of time worrying about is our share price. I mean, it's it is the heartbeat of the company, but fundamentally, if you spend too much time worrying about where it is and where it's going, you'll won't spend enough time worrying about where the company is, where the people are, and where they're going. So I don't forecast anything, but I'll say this. I mean, I think people must look at the growth and the trajectory of the group over the last couple of years, and then make their own assertions around the partnership rails that we've laid down and the momentum we have in our own brand, and then predict that growth and forecast that into the income statement and see what that means for them. But yeah, so I don't spend any time worrying about the share price. It feels good when it goes up, but conversely, it feels terrible when it goes down. So the less time I spend looking at it, the better. What I am proud about is we're finally over R1 billion, and that's it's not $1 billion, so I don't think we can call ourselves a unicorn, but R1 billion is still a lot of money here back home, and that's a significant milestone. And I don't think there's any turning back from there. I think this is a safe kind of territory for the group, and the prospects for the group are really strong, and so I see the growth is not going to let up, and that should reflect in our share price. But I don't want to make any predictions about where I think it's going to go.
Okay, awesome. And speaking about the big bull and the Purple Group market cap passing 1 billion, did you ever think that was going to happen 6 years ago when you're sitting on the beach in Mozambique?
Of course, man. You don't.
Humble Charles.
No, but Lesedi, seriously, like when you build a platform like EasyEquities, you don't build it for a 10 million rand opportunity. 3 years ago, we had to raise capital from Sanlam, and we raised 100 million at that time from them, and they had to believe it too. Otherwise, why would they put 100 million? So 100%, we had confidence in this business being what it is today. It's come slower than we expected. We thought it would come faster, but now that it's arrived, it's coming at us much faster than we've ever expected. So we expected the growth rate to be faster in the early part, but the growth today is staggering. I mean, we're finding it hard to keep up. Although I think we've got it, we've got it all under control now, and the team are doing a great job. So of course, and 1 billion rand wasn't the target. It still underperforms my expectations. For me, when this thing gets to $1 billion company and we Africa's first investment platform unicorn, then I think my job's done. Then you guys can ask for my resignation, and the next guy can take over. But that's the real goal. This is a great milestone towards an ultimate goal. But we're not going to rest, and I'm certainly not going to rest until this is $1 billion market cap.
Lovely. And so for all the people that follow Charles on Twitter and that work with Charles closely, everyone knows how much you love data. So I wanted to ask you, what are the 3 metrics that you have been watching closely that you're extremely proud of?
Look, let's start with the customers, because at the center of everything we do is our customer base. And I absolutely love the data that surrounds our customers. The first thing to say is there are more than 270,000 active customers. And that's just a number. It doesn't tell you anything about them. What I love about them is the demographic. Firstly, they are truly South African in every single way. In age, they're on average 32 years old, but getting younger every year. So when we started, it was 35 years old, and now it's going down. In fact, over the last 6 months, the customers that have arrived are 29 years old. So we're attracting a younger and younger audience. And why does that, why is that so interesting? That's interesting because we can change 29-year-olds' lives. We can create an investment habit right at the right time, and over the next 3 decades be alongside them as they create wealth for themselves. And that's just an extraordinary opportunity, and I'm privileged, we're privileged to be able to serve that community. There's 60% male and 40% female, and we're not comfortable with that just yet. It needs to be 50-50 for us. But that's come from 85% male 5 years ago or 6 years ago and 15% female. And so women are getting up and standing up for themselves and investing for themselves. And that's super inspiring because women make better investors. And in a lot of South African households are actually, they're the ones who look after the money. So, very important for us to make sure that men and women take up the investment activity. So that for me is the metric, that I guess I'm most proud about. We're making a significant difference in the lives of South Africans, hundreds of thousands of South Africans, young South Africans, and they're getting younger every year. That doesn't exclude the older South Africans like me. I mean, 67% of our customer base are under the age of 37, but the rest are over the age of 37. And we've got our oldest customer, I think, and I must check in, but last count, I think she was 99. So here's hoping that she gets to 100 and we can celebrate our first 100-year-old on the platform. And I remember, in fact, she must be 98 because she was 92 when we started. And I remember talking to her when we started, and it was interesting. I was like, why did you join EasyEquities? I mean, you're 92 years old. You're not going to be here for 30 years. I didn't say that exactly, but that was the sentiment. And it was interesting. She was like, Charles, I've always wanted to invest in the brands I love. And, she used her own language to say that, but I've never been able to do it. And you've just given me, you've been able to tick that off. I've been able to tick that off in my life. And the platform is so diverse in terms of who it services. There are super, super wealthy people that come to Easy. Our largest account is worth over 180 million, and he came from one of the big private banks. And then, but our youngest and not poorest, but lowest value customer invests R1 into various shares. And we've got everyone in between. So it's an incredible community that really does represent the fabric and diversity of South Africa. And there are some things that we're going to need to do better in embracing that diversity. I mean, Capitec raised it. They said, like, what about, catering to at least the 4 top South African languages? We do everything in English. And, I sort of sat back and said, well, why hadn't we thought of that? And, we've got to do that. We've got to embrace that diversity and deliver content in languages that are more comfortable, because one of the key challenges we're going to face as we keep growing and accessing a broader community is education. So that's the number that I really, that I love. The other one, which I guess the analysts will like, and those who want to try and predict revenue will like more, is what's the value of assets that are sitting across our various platforms. Because in turning over those assets, as everyone will know, that's how we make our money. People move those assets around. They deposit them, they withdraw them, they trade them, they buy and sell shares, etc. So across all of that, 20 billion in assets, that was less than 10 billion last year. And what's super interesting about that makeup is that only 6 billion of that is institutional. So 15 billion is retail. And that's, that again that's a very significant amount of retail value, and it's growing at a very significant rate. If you take that 15 billion rand in the hands of retail customers, and you say that the average age is 32, and you compound that number for 30 years, because they're going to be invested till they're 65 or 33 years, someone on the call can do the maths and tell me what this platform is going to have 30 years from now when those customers are ready to retire. And if you take the growth in equity markets in South Africa, traditionally around 12%, people are contributing, increasing their portfolio by 15%, go and compound that by 27% a year. And that's a banked. All we've got to do is keep those customers happy, and those assets will grow. And yeah, so for me, those are the two kind of key big numbers. Revenue is in our income statement. You can see it. The things I would caution people against in the income statement is just understand that the income statement was a game of two halves. You know, the first half we weren't profitable, and in the second half we were super profitable, and that was because some of the contractual business only came to us in the second 6 months. There were two big influencing factors that happened in the second 6 months. The one was that Satrix Now book moved to us, which was at the time about 5.5 billion rand. And the second one is that COVID happened and accelerated our customer growth. So the next 12 months of our income statement, you're going to see a 12-month effect. And who knows what happens with COVID, and who knows what happens with growth. But the bottom line is, you know, I think what if you're looking at our income statement, you've got to use the last 6 months as the picture of reality. You know, that's what the business looks like today.
Zedi, I'm going to jump in here and take some questions from our audience, and then we'll come back to you for a wrap up, but we're going to stick to our time. We're not going to get to all the questions, but if people would like to, please go to purplegroup.co.za. It's had a refresh from Tristan and our excellent digital assets team. All the information on our various brands is there, as well as our latest results with lots of information, and it answers many of the questions that you guys are asking. So please check out purplegroup.co.za. And also, as a reminder, we constantly update and improve our frequently asked questions, and that you can find at support.easyequities.co.za. And in our experience, the vast majority of users, once they access those two resources, get all the answers that they want. So support.easyequities.co.za is where you can check it all out as well. Charles, I'm going to ask you to limit your answers. We're going to have a quick fire round, 1 minute per question, because I want to get through as many questions as I can. You won't be able to answer it in the detail that you want to, but maybe just give the top line, and then we will go from there. I'll kick off with an easy one. In fact, I'm not going to do that. It's too easy. So can you chat to us, Charles, a little bit about what gets upgraded on the platform and when, and what are we looking for more advanced, sophisticated features like limit orders and the like? Who decides when that happens, and where can users access that?
Yeah, I mean, everything we do is prioritized by customer demand. So if lots of people are asking for something, then lots of effort and priority goes into it. And that's from increasing the functionality stack. The other side of that is, what are the friction points in the platform that are causing the most harm on the platform? And that can be scaling, it can be downtime related to maintenance, it could be onboarding, things like FICA and KYC and deposits and withdrawals. And again, so those we have to balance the functional requests, the request for enhancements versus the friction points, and that's where the priorities sit. And we're a small team, and I think this is where we need our customers to support us, is that if you want low cost anything, you have to realize that we have to make sure that we contain our cost base so that we don't ruin our economic outcomes. And you know, we've done this year. You know, we could throw more money at it and deploy these things faster, but that wouldn't work, because then the economic model doesn't work. So we will get to them, and if you want something done, then get all your friends to shout about it and make sure they want it done as well, and that'll drive our attention.
Great, thank you. Telco deal, yes or no?
You know, Coral, 6 months ago I would have said done deal, and then COVID happened, and so you know, I don't really know where we stand today. But I'll say this: we've also, and again, I want to talk about the size of the team and the focus. It served us very well to be very focused on a few things. Now that Capitec is in the house, I think it will serve us very well to stay focused on Capitec for a while before we take on anything else. So I'm not sure. You know, as you know me well, and you know that if Vodacom or MTN walk through the door and say, "Hey, Charles, here's a deal, build us this," it's going to be very hard for us to say no. But I'm going to try and say no while we pay all of our attention to Capitec and deliver along those rails. And you know, I don't think we need another distribution deal in South Africa. I thought we did a year ago, but having lived alongside Capitec and met the management team, I don't think we do anymore. I think we must really pay attention to the partners that we've got and respect those partnerships and deliver on them before we look up. Where a telco deal will make sense is outside of South Africa. They've got incredible distribution in places that we don't have any customers. And so maybe what we do is we work with them on deals in East Africa where they've got lots of customers and access.
Right, thank you very much. Question around Shanghai and some news that the JSE has done a deal. Will people overseas be able to access the stock exchange here, but when will we be able to buy shares in Chinese companies? So another way of asking this, currently you can buy South African shares, USD and Australian. Any other listings or stock exchanges on EasyEquities?
Yeah, we're looking at Hong Kong, China, and then we're looking at Europe and UK. We're working out the logistics on them. Certainly, and I don't know which of those will go live next year, but at least 2 of those will go live next year. So yeah, at least 2, and we must, again, just bite off what we can chew. The second question, though, around the Shanghai JSE access, wonderful, well done to the JSE and the team, to Leila and the team for negotiating that and getting that up and running. I mean, that's just an incredible market opportunity and could be huge for our liquidity. What I feel like I need to do is get on the stage and dance like Elon, because if the Chinese got excited about what we do and our platform capability and used it to access South Africa, that's an extraordinary opportunity that's sort of come out of my blind spot. So I'm going to think about that in December and probably have some conversations with Leila around how we can make sure that we're front and center on enabling retail access to the JSE from China.
Funding future growth, we go to the market, self-fund, and some liquidity and dilution of shares in the future. Is that a worry and a concern for you?
No, I mean, right now we're profitable and we can use our income statement to fuel our growth as it's currently constituted. To the extent that there are growth opportunities that we think are worth investing in beyond our income statement, then obviously we would go to the capital markets to do that. But no plans to do that right now and no need to do it right now. In terms of dilution, there are options that are outstanding. It's reported in our annual financials in terms of how many are outstanding. So you can look that up, but it'll probably be around 10% that will be exercised over the next, I think they're 5-year vesting periods, so over the next 1 to 5 years. So that'll create a 10% dilution over that period. And no, I think, liquidity around Purple Group, liquidity's grown significantly. On average, I think we're doing about 900,000 shares a day. A year ago, that was about 200,000 shares a day. So I expect that liquidity will continue to grow as we grow. The fact that we're now a billion rand market cap means that there are investment managers that will look at us for the first time and hopefully make some allocations, and that'll be good for liquidity. So yeah, as we grow, liquidity will grow, and we'll put the past of very limited liquidity behind us.
Looking at other verticals, specifically insurance, thoughts around that?
Yeah, right at the start, insurance was part of our business plan. And the reason is our mission is to make sure that we give you access to the best investment opportunities to help you create wealth. And the other side of that coin is to put services in, products and services in, and help you protect wealth. And so Investure is a good example of one that came in really early, which helps you protect wealth. But life insurance is another one. Because if you think about the journey towards wealth, there's a gap in the middle. You start with 1 rand, but you have aspirations of 10 million rand, and you have financial commitments to obligations to family that might be equal to 5 million rand. And life insurance is about ensuring that you insure that gap in case you're not there to see out tomorrow. And I think that the life insurance industry sells the wrong products to the wrong people. And I think that we can create a custom fit product for investors that understands that journey better and is aligned with that journey. So I don't want to say too much about it because I think that it is a key differentiator of what we do. But life insurance has been on our horizons. Almira and I have been working on it for 3 years, and probably people are getting tired of hearing about it. But we've designed the product, we've tested the product in small audiences. The feedback we've got has been very encouraging. I think you'll see a partnership from us in the space over the next 12 months. And if we don't do it in the next 12 months, certainly beyond there. But it's a big, we need to do it for our customers. It's part of the wealth creation journey. And it's important that you ensure that gap. And because our customers are so young, they probably haven't quite yet created those obligations, but they're going to start creating them, and therefore they're going to need to ensure the gap very soon.
There's a question from Michael around some detailed reporting systems around company, so I can share that we are doing a deal with Business Day, and Almira who's our UX expert, is also developing some other information systems for us. So we'll absolutely be providing detailed company reporting systems. Before I hand over to Lesedi, Charles, for a final question, and then I'll wrap up, I want to talk a little bit, or just mention to the users as well, features like Donate for Good, where thousands of our users have donated hundreds of thousands of rands the last couple of months with diverse charities, from hospice to Solidarity Fund and everything in between. That's a feature that
Trust.
for your Horse Trust. There's lots of stuff we're really proud of there, and a big thanks to the community. And I want to repeat, check out purplegroup.co.za for information about the stuff we've spoken about today. Check out support.easyequities.co.za for any of the questions that you might have. Trust yourself. You, in my experience, often know more than you think that you do. Lesedi, last question from you, please, and then we'll wrap.
Yeah, let's see which question I should ask. So Charles, a mere 6 years ago, EasyEquities was just an idea of and a passion of few individuals. And I'm so glad you changed the name from I Love Stocks, I think it was, to EasyEquities, because that's not that name. But today, EasyEquities is a household name, and that's changing the lives of ordinary South Africans. And I just wanted to know, how does that make you feel? I mean, you interact a lot on social media. We're getting tagged by you left, right, and center. So yeah, how does it make you feel? The impact that you have on people's lives?
Yeah, it's look, you're trying to make me cry, and it's because you know how emotional I am, and it gives me goosebumps. It keeps me up at night in a positive way. It inspires me to get out of bed really early, and it gives me all the energy to get up and do it tomorrow. I mean, I feel so privileged that I had a good idea, but I work with a team of incredible individuals who are able to execute that idea in a way that makes a meaningful difference. And it's an absolute privilege for me to work here. It's a privilege to work with all of you. It's a privilege to work for our shareholders, and it's also an incredible and extraordinary privilege and responsibility to work for all of our customers, because we understand how important this is to you and what a difference it can make in your lives. And I always dreamt that it'd be this big, but I never considered how it would feel. And it feels great. It feels incredible. I'm going to go on holiday next week to Mozambique, which is where it all started, on a beach in Mozambique. And I'm going to probably drink too much, and I'm going to reflect on what we've all achieved. And it's probably going to mean that I'm going to drink a bit more, and I'm going to cry a little in celebration of everything that we've done. So yeah, thank you. I want to say, in wrapping up, I want to say thank you to all of the stakeholders, the shareholders who believed 6 years ago, the customers, the early adopters, all of you for joining us and making it real. Without you, it would never have happened. To my team, who've been extraordinary and on whose shoulders I get to stand as CEO, which is an extraordinary privilege. And importantly, to our partners who trusted their brands to us and their customers to us. And that doesn't happen often. You've got to really treat those partnerships with respect and them giving us that trust. But Lesedi, thanks. It feels amazing, and we're signing off the year on a high. But I've got a feeling it might be a low for the next 12 months.
And then you have it, guys. CEO of EasyEquities, Charles Savage.
Thanks very much, Lesedi, and thanks, Charles. And to conclude, we don't always get things right at EasyEquities. In fact, we make many mistakes. But one thing that I am sure of is that the Easy team members, the Emperor Asset Management, Easy Properties, everybody works at Purple Group. When we make a mistake, we apologize, we fix it, we come back stronger. Our purpose is to democratize investment. We're here to serve all of you. As Charles says, it is a great privilege to work with and for all our shareholders, to be able to work with our friends, to make a difference in this amazing country of ours. And with this difficult year that we've had, Purple and everybody works there is really proud to have served all of you. So thank you very much for joining us. Apologies if we haven't answered all your questions, but check out our blogs. Go to support.easyequities.co.za, follow social media, and have a fantastic end of year. Be safe. And then last word, Charles, I've been asked to mention from a few people in the team that we think that you've become a little bit lazy now that you've concluded some deals. So please, a little bit less drinking, and can you come up with another 3 or 4 ideas in Mozambique, please, to keep you busy next week. Have a good holiday.
I'll send photos from Mozambique for all of those who are working hard at home.
Great, thank you. And thanks, Lesedi, for hosting us. Have a lekker afternoon, everybody.
Thank you.
Cheers, everyone. Thank you.